UN Committee on Economic, Social and Cultural Rights elects a Nigerian in UN headquarters, New York, to represent it. Revenue Mobilization and Fiscal Committee recovers about 57.7 billion naira unremitted revenues from collecting banks. International Monetary Fund advises countries to intensify economic diversification, has it cautioned Nigeria and other oil-dependent countries of a possible crash of the prices of crude oil. This is Business Express on NTA Network, and I am Musa Abubakar. The Revenue Mobilization Allocation and Fiscal Commission says it has so far recovered about 57.7 billion naira unremitted revenues from collecting banks in its efforts to boost revenue accruals into the Federation account. The agency said the recovery followed intensive verification and reconciliation of revenue collections and remittances by designated banks engaged by the Nigerian Customs Service and the Federal Inland Revenue Service between July 2012 and December 2015. It says 48.7 billion naira has already been recovered and remitted to the Federation account, while the balance of 9.07 billion naira relating to withholding tax on dividends only has been duly released to benefiting states' boards of internal revenue. In a related development, the Economic and Financial Crimes Commission, EFCC, has recovered 216.4 million naira from Swiss Golden Investment, an online investment that purportedly deals in buying and selling of gold bars, which is said to have instead swindled about 7,000 Nigerians of a total sum of 3 billion naira. A statement from the spokesman, EFCC Zonal Office, Kano, Idris Ishaku, said the recovery was sequel to petition the Commission received from thousands of complainants who alleged that they invested in Swiss Golden Company Limited, which was advised as an online investment that deals in buying and selling of gold bars. The petitioners had alleged that after investing over 1 billion naira into the business, Swiss Golden refused to pay them any dividend or pay them back their capital. Nigeria's economy is projected to accelerate to 2.1% this year, up from 0.8% in 2017. The International Monetary Fund said this Tuesday in Washington, D.C. at the presentation of the World Economic Outlook for 2018. The World Economic Outlook, however, forecast that the country's growth rate will slip back to 1.9% by 2019, although it did not say, but presumed to be as a result of the impact of the forthcoming general elections next year. Nigeria's growth projection in 2018 falls far below the estimate for sub-Saharan Africa at 3.4%, but is stronger by 0.2%, estimated by the Global Financial Group in its October forecast. The IMF, a member of the World Bank Group, attributed the country's growth acceleration to improved oil prices, revenue and production, and recently introduced foreign exchange measures that contribute to better foreign exchange availability. A Nigerian envoy, Peters Muze, has been elected to the UN Committee on Economic, Social and Cultural Rights in a keenly contested election held at UN headquarters, New York. Muse, who was elected for a 4-year tenure, will be representing Africa on the panel from 2019 to 2022. His victory in clinching one of the 2 Africa seats on the board of the committee for at least 4 years is seen as a feather for Nigeria and the potential to improve Nigeria's future diplomatic leverage. CESCR is the body of 18 independent experts that monitors countries' compliance with the International Covenant on Economic, Social and Cultural Rights of Citizens by its states parties. The attention of the economic and financial world is on Washington, D.C., where the 2018 spring meeting is currently on, and Business Express is on ground to feed Nigerians with happenings at the event. Among Nigeria's large delegation is the Chairman House Committee on Banking and Currency, Jones Oyerere, who says fiscal and monetary policy makers in Nigeria must align and work together for the common good of the country. Jones Oyerere, who was speaking at the sidelines with the Business Express correspondent Leah Katun Babatunde, said it became necessary to tidy up the debt books to boost investor confidence, especially as the countdown to 2019 elections begin with the global trade war on the horizon.
Legislator, we've always come up with this idea that for them to really get it right, they must, we've said this, for the often time, they must set up the Financial Services Commission, especially as a developing country. They have it in other climes. The whole idea is to have the fiscal and the monetary authorities converge in one place, so that if you are churning up policies from one side, the other side will be able to counterbalance whatever you're doing.
Oyerere also called for an improvement of the investment climate to give room for more foreign portfolio investors to come in.
If not for the huge non-performing loans. But now, because things are evolving, we need to be a little bit careful. I would have thought that we should have increased our export proceeds, not just increasing our export proceeds, but we should also have encouraged the global village to bring in huge portfolio investments back to Nigeria.
Hello, Leah. What's the general atmosphere at the spring meeting?
Hi, Musa. And good morning or good afternoon. Well, most very things just stand out and we cannot do without them. The world has gone digital and we can't just wish that away. And secondly, the trade activity is going on at a current seemingly trade war between the US, China, Russia, and some major economies. And also tackling public debt has been an issue on the front burner this morning. We are also among countries that are having this rise in debt profiling, and IMF is saying it's time to put some limitations to these debts, except of course it becomes very, very necessary. It was part of the fiscal monitor report, which is ongoing, but some moments ago we had that, and earlier we had the global financial stability reports presented also by the IMF. And so another issue we should be asking within discussions from yesterday till now is, should Nigeria begin to look more into the diversification process, coming from the fact that oil prices have been predicted would not hold for so long, they will still cut down, they would come down after some time. Are we prepared for this next time this fall in prices would come globally? And of course, the growth has also been projected to, in the next 1.5 to 3 years, slow down. Policymakers will begin to ask themselves questions. What are we doing in that regard? Are we prepared for this? When it eventually comes, what will be the way out? And just like the Chairman House Committee on Banking and Finance pointed out, what is the of convergence between the policymakers, both the fiscal side and the monetary side. So these are most of the issues that are being discussed before yesterday, and today.
What are the Nigerian delegations up to?
The Minister of Finance to come in today, and she also will be coming in with the Minister of Budget and National Planning, who has been in London with her. They are on their way, they're coming in today. The Senate President is also coming in today, and tomorrow we'll be having, starting from tomorrow, we'll be having sessions being chaired by these ministers and the Senate President. The minister is going to be part of a panel to look at it.
Thank you very much, Leah. Thank you. Let's leave it there. Moving to other stories. With the commencement of the single biggest gas pipeline project in the country and Africa, Nigeria is about to realize her dream of achieving energy security, economic growth, and employment for teeming youth. Lydia Sampson examines the prospects of the Ajaokuta-Kaduna-Kano gas project, which, upon completion in 2 years' time, is poised to propel the nation's development.
To become a major international player in the international gas market and lay a solid framework for gas infrastructure expansion within the domestic market is being boosted with the historic Ajaokuta-Kaduna-Kano AKK gas pipeline. AKK gas pipeline, a product of public-private partnership, experts say will enable connectivity between the east, west and the north, which is currently non-existent. NNPC Chief Operating Officer Gas and Power, Said Mohammed, says the multiplier effect of the Ajaokuta-Kaduna-Kano gas pipeline will resuscitate moribund industries and create jobs for many Nigerian youths.
For us is to move the energy source to where it is needed and then propel the other sectors of the economy, i.e. the industrial, the power, and of course the agriculture.
The project, which is divided into 3 for implementation purpose, will be simultaneously executed.
We thank this administration for the initiative. Really, it has been on the table, but until this administration came in and gave us, of course, the necessary backing to go on this private partnership, and thank God today we have gotten the Federal Executive Council approval, the contract has been awarded, and the contract documents have been signed.
On completion, 24 months from now, AKK gas pipeline is expected to enable gas supply and utilization to key commercial centers in northern corridor of Nigeria, with the attendant positive spin-off on power generation and industrial growth.
Joining me to speak on the gas pipeline project with a view to energy security is Engineer Mohammed Saidu. Thanks for joining us.
Thank you for having me.
Well, the AKK gas pipeline project has been described as one of the biggest projects in Nigeria. In what way will it impact on the country's gas?
Yeah, well, thank you very much for having me once again. And let me say, first of all, to say that AKK, as the acronym of Ajaokuta-Kaduna-Kano pipeline, is just a subset of the entire dream that we had. We have been trying to develop gas pipeline infrastructure in the country for the past 30 years. And you all the Nigerians must know that since 1988, when we commissioned the so-called Escravos-Lagos gas pipeline, we have not added any big trunk line. But then sometime as early as 2008, we sat down and developed the gas master plan, which had the blueprint of infrastructure development. And of course, part of it is to extend the line from Ajaokuta towards the north. Okay. The Ajaokuta has been having gas in that place since 1987. Not many people know that. If the steel plant has been running, gas would have been adequately supplied. But then part of the dream is to network the entire nation with gas pipeline infrastructure and make sure that the molecules that are developed from where the resources lie get to the markets. And one of the things that we earmarked to do is to say, look, with the one to the west, which has already been laid, has to be expanded. And that is the looping. We have already doubled that line. And you all know that we have also extended that line up to Ghana, to the neighboring ECOWAS countries. Then to the east, we are developing the line coming from the Kwaibo mobile production to bring into Obi, who's somewhere in the northern part of River State. Another line coming from the creeks to the northern. Then we said, look, when we have all these gases coming to a hub, we have to take them to the use. So the need to link east and west now came up. And that's what brought another trunk line of 48 and 42 inch diameter. That is OB3. Obiaf Obri come to Oben. Oben is somewhere in Edo State. So by the time you bring that gas to that Oben hub, it can go anywhere. Now to the users in the west as far as Ghana, to the north as far as Jakarta today. But then we all know that energy security is required nationwide. And we said, look, they have to extend this pipeline as part of the dream.
Okay, the project is set to worth around 2.8 billion naira. How do you intend to fund it?
Yeah, that is one of the key issues. That is what makes this pipeline unique again. Hitherto, all this infrastructure had been developed by government through of course, through budgets of the government. But today we sat down and said, what has been the bottleneck? The bottleneck has been finance. So let's develop a model that will run in such a way that the financiers become part of the business. You come and put in your money, develop the pipeline, and then get your money back through the tariff of the gas that passes through that pipeline. So it's a contractor finance project, really.
Okay, you're saying that is a public-private partnership?
Yes, in the sense that, you know, the law allows multiple ownership of the network, but single operatorship. Today, the network is operated by an NNPC subsidiary called Nigerian Gas Transportation Company. So you bring in your money, develop the pipeline, then NGPTC operates it, and the money proceeds from the network goes into a bank where we set aside what needs to be paid back.
Okay.
So it's a private initiative, really, and I must say that that is not the only thing. Okay. Other pipelines are being developed today. As we just finished AKK, we are bringing the gases that are coming from the southern part of Akwa Ibom and River State. And also there is another connecting line from Obibo that will pass through the eastern corridor, through Umuahia and Enugu, again to service all those industries in the eastern side. And those, all this, we are going to build them on the same model of private partnership. Then to the west again, we all know that we have gotten gas up to Lagos and Ogun State, but we need to go into that corridor of Oyo up to Kwara, and then link up eventually with this same AKK, somewhere in the north. So at the end of the day, the dream is to have the entire nation being connected with the network.
Okay.
But then that is only one initiative. A lot of gas resides offshore. Again, the development needs money. That's where, again, we are saying, look, who will do that? We are already talking with private guys who will now develop an offshore line that will come from the offshore of Akwa Ibom, River State, and bust out at Lekki, Lagos. Again, link up with the domestic supply into the network.
Okay. When it's completed, what impact will it have on the economy?
A lot. You know, gas itself, we don't want to be looking at gas as a commodity. We want to be seeing gas as a catalyst to propel, of course, all other economic sectors of the economy. One, the industrial. For those of us who grew up in the north, we know that how Kakuri and Bompai were booming with industries. A lot of them have gone because they can't afford the energy. And today we also know that agriculture needs to be propelled. And one of the ingredients is to have fertilizers. So if you can use that same gas as a feedstock to produce fertilizer where the farmers are, again, a lot of things will go flourishing again, once again.
Okay. Thank you very much, Engineer Mohammed Saidu, Chief Operating Officer with NNPC.
Thank you.
Let's leave it there. Do you know that shrimps and prawns are Nigeria's third largest agricultural export with minimal multiplier effect? Let's see how other commodity prices are playing out across the globe. The Nigerian stock market advanced Tuesday and recorded pluses to cancel the losses of the previous day. Let's join Amina Nujem for a look at figures from the Nigerian Stock Exchange.
The equities market of the Nigerian Stock Exchange saw the first day of trading of the week on Monday, 16th April 2018, closing in negative territory, depreciating by 0.97%, with the OSHA index at 40,533.37 basis points, while market capitalization stood at 14.641 trillion naira. 192 million equities valued at 3.127 million naira were traded in 3,917 deals. The NSE on Tuesday, the 17th of April 2018, closed in positive territory, reversing the negative trend which was recorded the first trading day of the week on Monday. The OSHA index appreciated by 0.63%, with the OSHA index at 40,788.68 basis points, while market capitalization increased to 14.733 trillion naira. 1.602 million equities valued at 10.910 billion naira were traded in 4,729 deals. The financial institutions were the most traded stocks, while Unity Bank, Owando and Skybank led the gainers table. C&I Leasing, Fitson and AG Leventis led the losers.
To look at developments in the capital market, we have Sabinus Chuku of Standard Union Securities in the studio. Thank you for coming on the program.
Thank you very much.
Okay, the Nigerian Stock Exchange closed yesterday 0.63% high. What's your take on that?
Well, you know that companies have started releasing their results. And as they release their results, most of them are declaring dividends. All right. So most of the companies, especially the banks, they declared very good dividends. And you know, if a company is doing very well, one of the parameters that actually determines the direction the market should go is performance. All right. That is essentially what actually happened. So majority of them have released the result. Last third quarter, first December, that's full year results. They have released them. Although not all of them have actually released their results. But those of them that released their results performed very, very well. Although when it comes to dividend payments, they didn't, in terms of dividend yield, they don't have, the shareholders did not receive much.
Okay.
Okay.
The sectoral indices was inspiring.
Okay.
How would you look at the major drivers?
Well, the major drivers are the banking sector. Like I said, the majority of the results we got came from the banking sector. And that was why the index actually went up, because people were reacting, all right, to the performance of these banks. Yes.
Okay. Okay. To what extent would you say global happenings are actually affecting the Nigerian stock market?
You know, the market for fundamental analysts, the market is a part of the global system. Nigerian market is a part of the global system. So whatever happens in the global, if it has to do with oil price, if there is appreciation in oil price, you know that companies here that are in the oil industry, all right, will benefit so much. They'll be favored, and definitely their price it will reflect in their pricing, and that eventually will affect the all share index, especially with respect to that sector. All right, then you know that if there is this problem of Syria and all that, is also negative. It has a negative impact on the market. All right, that is globally. If we consider the performance of Dubai, especially those eastern markets, they are not doing very well because of what is happening in that area. Okay. All right. So,
how would you analyze the likely outcome of activities for this week in the in the stock exchange market?
My belief, I still feel that the market might not go up so high. Even if it will go up, it will not go up high. But it's like as of today, I'm just from the trading floor.
Okay.
The market went down, but marginally, 4 basis points down. So it may likely continue tomorrow because from the way the market, even the participants behaved. You know, the participants are represented by stockbrokers. All right? And since the companies, in fact, most of the companies are being marked down for dividend. All right, and once a company is company's price is marked down for dividend, it usually goes down. It affects the all-share index. It affects the performance of the market. You understand? So that's exactly right.
Okay, so we've been talking to Mr. Sabinus Chukwu of Standard Union Securities. Thank you very much, sir.
Okay, thank you very much. Thanks.
That's Business Express today. Another episode beckons on Friday. See you then. I am Musa Abubakar.